Alrighty, let's just pick up straight back where we left off in part one. Hopefully you have already watched that. So kind of a quick recap of where we are. Let's have a quick look at the 4-hour time frame. So remember, we're coming off that extreme sort of monthly level. So we do have to understand, right, potentially we could have that longer term high time frame pullback, especially as our daily swing high is all the way up here, right? Because this was our last daily break of structure. We've had that movement down. Okay, so we always have to be aware in the back of our mind that although the 4-hour trend is here, right, the 4-hour could switch bullish to facilitate that daily pullback, so on and so forth. 4-hour swing structure, what we went through in part one was essentially after that break of structure, right, how to play that pullback. Then we came into a decent level of 4-hour supply. We had our bearish 4-hour change of character, which happened to line up with the M15 bearish boss. So the M15 swing structure switched bearish, and in line with that fractal break as well. And then we were just looking at these sells here. But we are aware, as we always should be, particularly with how it's all happened, right? Coming off that extreme level, big sweep of liquidity, almost V-shaped reaction to supply. We have a mitigated extreme supply above. And like I just said, we know that the daily, that's that run. We could easily have a daily pullback to premium supply before continuing, okay? So the point I'm really trying to drive home here, even though obviously I'm benefiting from the benefit of hindsight, I know how this played out, is we were saying this, if you go, for those of you who have obviously been in the community whilst it's been happening, we've been saying this, constantly been talking about the level we've been coming off and constantly talking about the possibility that we can have that pullback. So although, on paper, if you were to look at your trade plan, right, if it's similar to how we teach and trade, you would say, okay, well, we've come off a premium 4-hour supply level, we've had a 4-hour bearish change of character, the M15 is now bearish, shorts are pro M15 and 4-hour swing trend, etc., etc., etc. Should be easy to target this low, okay? But hopefully now when you're really trying to become that better trader, that more advanced trader, getting it to that next level, you have to take in all of the pieces of the puzzle, read the environment, the nature in which it happened as well, big sweep of liquidity, V-shaped reaction, right? That's kind of the start of the entry model in which we could see that. So when we do get those bearish changes of character and we do get the M15 bearish, 100% I will be looking for shorts in the high probability and they could always take out this low. But I'm always aware in the back of my mind, right, like we were saying, that this can just be a 4-hour internal pullback, right? Maybe down to this demand, maybe not, to then continue higher. Then again, we can look for shorts from here, which would be even higher probability that potentially that swing lower high will be in place because this will have to hold, right? Obviously for that 4-hour bearish trend to continue. But with the overall knowledge of all the pieces of the puzzle, that's when we can be either more aggressive with, we can look for those counter trend longs to anticipate that movement here and then again, right, continue that movement, or we can just understand why shorts may not work out, or we may want to be a bit more conservative with our shorts, or we maybe just want to be a bit more aggressive with our management so we take profits a bit quicker. And that's really kind of the point we're trying to get to, is just bringing our trading to that next level. So yeah, we had that swing breaker structure. This is our swing high and swing low here on the M15, right? But where are we? We've come into a level of demand, right? Now, if you want to be really, really, really accurate, if we actually look at this level of demand, you see how after the demand was created, right, when we had the bullish candle close above there, with that next candle, it came in, filled those orders and continued to the upside. So the way I view the market is you want to do it on the unmitigated level, and it would be those sell to buy wicks, because what is that in a lower time frame? That would be price coming down, coming up, and then it pulls back, fills up those orders from that demand, and then goes. So technically this would be your unmitigated POI. Sometimes I'll just draw it like that, right, and include the wick because there can be orders there below. But anyway, so obviously that led to a break of structure there. And we can also see, if we look left, it flips that sort of last point of supply, right? It's extreme, that reaction leg where we really gained a lot of momentum. Some nice inducement as well. And that was where I actually got caught out trying to short this back then. We swept the liquidity below that chart, whereas when I saw that, we pulled back in, I tried to get short here and I got my ass handed to me, which is always fun. But right, it's about trying to, learn from our lessons and see what we can gain from the market, not over analyzing our losses, but trying to see, is there pieces of the puzzle potentially we have missed to try and improve going forward. Cool. So we've come into this level. M15 is obviously heavily bearish. It's aligned with the 4-hour swing trend. But we know, looking at the larger swings in price, that potentially this is one moving up, just to have that internal pullback to potentially go higher, okay? Cool. So we come in here, we have had a bullish change of character. And this is kind of a perfect example of what I was saying with bullish shock. It is the most aggressive type of structure break. It's literally fractal structure. That is more like an M5 pullback or an M1. So yeah, it's the first little sign we could be going, but I guess a more significant internal break of structure I'd want to see would be this high here go, because that's kind of the last real sort of visual actual swing, internal sort of swing, right, we can see in the market. So if that went, that would be a bit more significant for me. But that's not to say that you can't look for longs from within here. Of course you can. It's been around the start of ages. So we move to the upside, we get a nice bullish break of structure. Okay, so what's the sort of framework we're using is we expect that internal structure to go, and then we could have a change of character up here, nice premium supply, and that's a good first area to look for shorts, but we're aware that that could just be a bearish chock, right? Just to facilitate that pullback down and towards that internal higher low. So then if we see a bullish chocking within here, right, then we know that that high could be weak, and then we don't want to sell from it, and we could be coming up higher. But if we do get a bearish IBOS there, then that's a great, much more confirmed signal that now we're ready to take out the low, and we can follow that bearish trend to the downside. If we say fail to take out that low and we reject some extreme demands, then if we get a bullish IBOS, right, then we know that this high is now likely weak, and we expect the bullish internal trend to continue until it takes out that high, right? That's the kind of framework we've been using, and hopefully we're starting to get more and more comfortable with that now, so I can go through price a little bit quicker until we get to some kind of interesting and slightly more complex scenarios. Otherwise we'll be here for hours and hours and hours. Cool. So we haven't quite got a bullish close above that, and now we do. So that's our bullish IBOS, right? So now this would be that next sort of bearish level I'd want to see go before we can kind of really have confidence that this weak swing low is going to go. So obviously there's supply levels over here. You can be dropping down to the M1 and looking for your entry models depending on what confidence you look for, right? I'm going to leave that down to you guys at this point. That is not a bearish chock. Why is that not a bearish chock? Because that never took the high, right? It's actually equal highs. Let's double check that. The high is 0.69 and the high there is 0.69. So just looking up here, of course, to see that. So that means this was never in a low. So we actually didn't get a low there, and we've left some nice perfect equal highs, which is obviously bullish confidence. That price may want to target, right? So at this point, our short's going to be high probability. Well, we haven't even had a bearish chock. Maybe we've got a nice M1 entry within here when we came to this POI potentially. But now what I'd be looking at from an internal structure perspective is price is just coming into here. So then if I saw a chock, then I'd be expecting that high to go, right? So let's see what happens next. Don't quite get a closure. Now we get a pretty convincing solid closure below. Let's draw our swing structure so we can keep aware of where we are. So at this point, what would I be thinking? Well, the internal structure, especially quite significant larger internal structure, is now aligned with the M15 swing structure. So I'd have a pretty decent idea or framework to work with that this weak swing low is now pretty much ready to go. It doesn't have to go straight away. What do we expect after internal break of structure? We can expect that internal pullback before going. Okay, so let's see what happens next. Okay, that's quite an aggressive V-shaped reaction from this sort of extreme demand area. If we take the pivot range, there we go. Okay, so bearing in mind what we were saying on the 4-hour chart, we know that potentially this was just an internal pullback to continue higher. We've pulled back a decent amount, from this leg, roughly the EQ. We've come into a very reasonably significant demand level. We've had a decent move away, we've come down, and we've had quite an aggressive movement away. So this is where the question is, right? And I was asking this as well, how do we interpret this high? Is this high weak? Well, with this framework, this is how we can use this. Well, because we've had, remember, the bearish IBOS, so this was the bullish internal trend, and then it switched bearish. What do we assume about this green internal trend? We assume that it will continue until it doesn't, right? That this is a strong internal high, okay? So as we're coming back up, right, we can still look for shorts from here, from whatever POIs you have, and potentially assume that that will continue, okay? That's the mechanical framework I'm now using. I'm not saying that's weak. Now, does that mean that you have to take trades from here? No, of course not. This is where you need to use some nuance. I need to read the bigger picture, taking everything into consideration, i.e. equal highs sitting behind it. The fact that that 4-hour internal pullback may be finished to continue higher. The fact that we're starting to build this demand chain that makes sense, right? We swept liquidity. The fact of how it's coming back, right? That big, strong V-shaped reaction. Okay, there's things that you can bring into your decision making as your own individual trader as to why you may not want to look for shorts. But in terms of the mechanical question, is this a strong internal high or not that we would expect to hold purely just from that little concept on its own? Yes, it is still strong. Okay, so that means you can look for some shorts from here. But the point I'm trying to make is you as a trader may not want to set a risk entry on that extreme M15 POI. You may want to see a lot more confluence, right? You may want to see an M5 shift in structure from when we come into that. All these things that you may want to use. You just may want to be a bit more hesitant about this, okay? Now, there is no bullish chock here because from this moment, all of these candles break the prior candle's low. So that's all one fractal down movement. Now, let's just imagine for a minute that there was a pullback here, a candlestick pullback, and we had that movement. Just imagine there was. So let's say that this was a bullish chock. That still doesn't change what we just said, right? Because remember, this is still that strong internal high because it's based on the internal structure. So the chock does not mean anything in terms of this, or at least the way I'm viewing price action since at the time of recording, okay? So you can look for shorts as we're coming into this level. Now, price pushes up and it spikes straight up through that. So we do not have a internal break of structure because we need a candle closure. So you could still look for some shorts from here. But again, this is where you want to be, that advanced trader, right? And reading between the lines, all the things I've said, the amount of momentum we're getting. And maybe you want to see a bit more confluence before you want to jump into shorts necessarily. Because if you're looking at how strong this is, if you go down to the M5 or whatever, right, you're going to see these kind of swings in price. Get a little bit of a pullback there and then that. So maybe, especially if you can't get in the short initially on the M1, if you're being aggressive and price is all the way down here, and then we come into these levels of demand, right? And then price is coming back up. Maybe you don't want to short in here because, is it that clear at that point? Bullish intentions are starting to come in, even though the internal structure is still bearish, right? So maybe this is where you want to wait for like this low to go. And you just want to see something like that, a bit of a shift in order flow, and then you want to get in. Or you just want to sit in your hands because it's not a bit clear. Right, this is where structure can get a little bit more complex, and reading everything together. Hopefully, I kind of made that point clear. But just purely in terms of the internal structure, we would still view that right as a strong low. But this is just where you want to use a little bit more nuance and go, okay, maybe I want to see that shift, and then maybe you'd have a bit more confidence, right? Because it's likely this could be just becoming inducement for the extreme up here, and then again also drive that point home. That can be this movement, right? We have to look at the bigger swing. So don't forget to zoom out a lot as well. If you want to use a 1 hour chart, whatever helps you, but you don't have to. You can literally read what's going on the 4 hour chart and the daily, just all on the M15. Like if you imagine trading view broke and whatever time frame you're on was just stuck with, right, for the rest of your life, and you can never change it. Doesn't matter. You could be on the 13 minute. You can make it work, right? You just have to zoom out and understand the bigger swings and make a system for it. And this is why, the pip rule as well, although it's super, super useful, it doesn't massively matter if, excuse me, one of you has slightly more tighter pip rules than someone else, because as long as, obviously using more time frame analysis, or just like I said, zooming out and having a good understanding of then how to interpret the internal structure, it doesn't massively matter then, because either way, I don't know how else to describe it, but there'll be some more examples that probably make it a bit clearer of what I'm trying to get at. But as long as you have that reading, then you can you can start to trade in line a bit more with the market and kind of going with that order flow as it's going on. But anyway, let's just crack on with it, because I'm probably going to lead to unnecessary confusion with that. And I can see, right, so. We came into that level of demand, right, with that recent sort of smaller internal structure, and we've continued up. So it's just in those scenarios, maybe where you want to be a bit more patient and wait for some extra things. So then we come into the extreme here. So yes, this is a strong M15 swing high, and yes, we would expect it to hold until it doesn't. And yes, this can be a high probability area to look for shorts to continue down. But with all the confidence we say, I'm not going to go over it. You can understand why maybe you want to wait for a bit more, especially with the amount of momentum we've come into it. So in terms of an internal break of structure, I'd want to see that logo, and in terms of a chock, it's quite far away. So this is just going to be down to you whether you want to wait for that kind of confidence to go or not. But it's about understanding why in this scenario it's very likely that this movement into here, it's just going to be that pullback to then continue higher potentially and switch bullish, and then why this on paper could sound like a very, very high probability level to get short. It's the extreme M15. It's in line with the M15 swing trend. It's in line with the 4 hour trend after coming off 4 hour supply, right? But we understand, looking at the structure, is this as high probability as other scenarios in which you could list that same confluence in terms of what I just went through, in terms of it being the extreme pro trend, blah, blah, blah. No, right? And that's what I mean about getting that experience in and not just trading every M1 shock that happens in an extreme M15 POI, because they are not all the same. So as mechanical and systematic as we can be, this is why I say in the course, right? We want to do that, but you need that 30%, kind of that, between 30 to 20% of discretion to if you really want to bring your trading to the next level, rather than just going, okay, M15 POI, chock, pro trend, let me get in short and let me target the low, right? It's obviously, trading's not as simple as that, okay? Cool. So then we switch bullish on the M15, and it's not even about taking losses in here. It's more about understanding why, right? Understanding why potentially it wasn't as high probability as other ones, and then not being blindsided and surprised as to when this happens and getting frustrated of like, M15 strong highs have to hold. No, nothing has to happen. It's just a framework that we use, right? But if we bring in all the pieces of the puzzle together, you guys get what I'm trying to get at, right? So anything like this, like old POIs here, they might provide reaction points, but anything like this, we just, they're liquidity now for future higher prices, right? We don't really want to be shorting from these. You can do if you're more aggressive, if you get the right confirmations, etc., but we're expecting this high to now get smashed. So let's see what happens next. Let's bring this forward a little bit to another sort of more interesting bit of price action. Okay, so here. So for me, that wouldn't be, especially with relative to recent price action, that's not really an M15 swing pullbacks. And change this to orange, prefer the orange. Don't know why. Anyway, so what do we have? Well, we have a bearish chock. Okay, we can all see that. That's mechanical. There's no if, buts, or maybes about that. It either is or it isn't. Now, in terms of swing structure, right? Some people would classify that as a swing pullback, a bit more aggressive and tighter with the mapping. Again, absolutely fine if you do that. For me, I don't, but I would classify that as an IBOS. And this is what I was trying to make the point of earlier. It doesn't really massively matter what pit bulls you have if it's different from trader to trader, because if you have an understanding of internal structure now, like hopefully we will after this, right? Then you can use this to trade in line with the internal structure. And then if the internal structure then switches bullish, or that person who maps swing structure as tight as this, then you're both aligned. But you can, I think you guys kind of get where I'm getting at. Anyway, so this would be the swing low would always, it's the lowest point that took out the swing high, right, on the M15. So we've got quite a big range to work with. And this is why when you get those big, massive ranges, is what I was trying to talk about in the theory video before, when we were going through those annotations, right? This is where really having that understanding of internal structure really comes into play, because this is where price action can get a little bit more complex. Now, one thing I will do, and this is where the benefit of hindsight comes in now, is when I was looking at this live, I only mapped the refined single candle pivot zone. But obviously now with the benefit of hindsight, it would have been a bit more better to just, especially when the two candle pivots so near, just to refine it to there and be aware that we're within here, right? And that can give a little bit more confidence as to why potentially we could have a decent pullback from here. We get that M15 sweep of liquidity, reasonably V-shaped chock, etc. But if we get that IBOS, then we're really online for that pullback. And then when we see the bullish boss, right, then we can assume that this is then the week high. Why? Because the bearish internal trend is now over. So now when we get that bullish IBOS, we now assume that bullish IBOS will continue until it takes out that high. If it fails to take out that high and we get the bearish IBOS, then we assume what? We assume that bearish internal trend will continue and until it takes out that week low, where the start of that previous internal trend continued, right? That's that sort of overriding simple framework we're trying to use. But obviously it can get a little bit more complex with that when you have internal trends within that orange internal trend and when you combine it with all of the other confluence that we're looking at. Cool. So we're coming to our 4-hour supply. We've had what can, be good confluence for a swing pullback, liquidation, mitigation, V-shaped reaction, chock. Let's see if we can get that IBOS just to give us a bit more confluence, because remember, a chock could just be to pull back to that internal low, right? And then you could get a bullish chock like that, and then we'd be expecting that high to go, and you wouldn't really want to be shorting from here. Okay, and that's why IBOS can give you just that much stronger confluence than just a chock. So let's see what happens. Okay, so we start to sell off. All right, I'm not going to draw on all loads of demand stuff. All right, and then we have this level here, right? So at this point, I would be viewing that as that one internal leg. Okay, so now we're within this orange level here. So let's see what happens. Do we get a bearish chock? Yes, we do. Okay, so now you could say the where are we? M15 chock. So now how could we interpret this? Well, remember, where are we within swing structure? This is the M15 swing high. We've now had a sizable pullback, so I can definitely say that is my M15 swing high. All right, so we would be expecting a swing pullback, right? But what is that swing pullback likely going to be made of? That M15 swing pullback is likely, get my orange thing, going to be made up of an internal trend, right? When that internal trend changes, so not just a little chock, because that, remember what that little chock could be here. Yes, that could be the signal of the M15 high or low, but we know that it could just be to pull back into that strong orange internal high to then continue. It's only when, like, to continue like that, but it's only when we get the bullish IBOS that then we have a lot more confirmation the M15 high low is in place, and then we can follow the M15 internal structure, assuming that will continue until we go up, right? But within those orange lines, what can happen, right? Even this is all on one time frame, especially when you get these larger swings. You can get, say like this orange pullback here, you can get green structure, right? And it's only when that green low goes that now we know we're ready for this movement and we can continue down. Likewise, right? We can get green movement up here, but it's only when we get the bearish IBOS on the green structure, if it's visible, right? Then we know that low is going to go, right? It's kind of the same way we view multi-time frame structure, but we're just viewing it, that's the fractal nature of price action all on one time frame, which is easier to see, right? When we get these bigger swings, of course, like this, right? Okay, so yeah, orange, let's get orange out just so you can kind of see what I'm looking at. That would be the level I'd be looking at for the IBOS I would want to see to go. So now we had that chock, we've pulled back up into this level here. Can we look for shorts? Yes, we can. Okay, now it comes into, well, after we get that chock right, we then look for the short to try and take out this low. I know I'm doing this a little bit quick, but I'm trying to speed it up. And then we get another movement down. Now this is what I was saying, I think I probably should have drawn this first, where we know we're looking for, sorry, I want to get the colors right because it will help. Thanks for your patience. We get the orange pullback and now we're looking for that move, right? But then green, this is so pedantic, but there we go. Within that, right, we can have a bit of green structure. So get this down movement, this up movement, and then this down movement, right? So now you can see how we've come down, we've tried to take out the low, we failed to do so, and we're retracing quite aggressively. So this is where before maybe if you want, our understanding wasn't as good. This is where I would be a bit, scratching my head and be like, well, we've had a pretty good attempt at doing it, we're retracing quite aggressively. Does that now mean this high is weak? What if we get a chock? Does that mean this high is weak? But if you kind of view that as the internal structure, right, and then you get a boss there, and you get a candle closure above, with the supply chain then failing as well, then I'd have a bit more confidence that this high is going to go right, and then we can look for that. But that could then get a bearish IBOS again, and then that can still be the orange trend being intact, right? I'll just get rid of this, because even if this happens on the green and we take out this high, what's happened with the orange? It's still that. So you can see how you get the structure within the structure, but it can just help you to kind of stay out of some potential losses. So you can look for obviously a trade from within here, but if we get a closure above that, then that's likely that high may potentially become weak. And then we go, okay? So that it's not quite crystal clear, that one, for me, but yeah, it is there. So at this point, this is where it could get a bit confusing, right? Because you could go, okay, well, is that the internal structure? And now we're looking for the long from here and we're going up. But because this is one internal leg, right, that can be one pullback. It still hasn't been broken, and then we're going. And the largest swing is going to take over the smaller swings, right? And this is what I mean by some complex scenarios where it can get a little bit tricky, and then we end up smashing out those equal lows there, right? And again, we get that pullback. So this would be your next bit of internal structure. I mean, obviously, I'm not adding in all of our analysis and confluence here. Like we've got these supply demand flips, right? Ranges that we'd be looking at, price coming in, right? You guys can all add this, but I'm just trying to really concentrate just purely kind of more from a structural perspective, okay? So then we get a break and closure below here. So, we look at those bigger swings, right? The orange swing, what do we have, right? So now if we can get that break here, that could be the end of that M15 swing pullback, and now we'd assume those bullish trends will continue until we take out the week high. All right, so that would be your chock level. Cool. There's your chocks, there's your first signs. This way you could get to look in, but really I'd want to see this go before I'd have confidence. And then do we get a break above it or not? Yeah, once we get that break there, now what can we assume? We can assume that that bearish internal trend has now finished, right? And now we're going to hold and take out the start of that. The caveat to that, right, is, and this is where, you need to use a little bit of nuance and discretion here, is potentially, this is a bit too of a small pullback, and it could just be this, right? And what I've marked out is actually, and this is where you kind of have to just be aware of it in the back of your mind, that I could have mapped too small of a structure here in the internal, and it could just be doing that, right, to then continue that larger orange structure. Okay, so hopefully you can see that, like down movement, big up movement, down movement. It could be a big up movement. That could be a protected internal high, right? But it also could have been this one where I switched bullish there. So that's where then you have to, look at it as potentially green structure. And I'd be happy to get long, and I'd be happy to trade these structures here. But then I'll be aware of this high that as we come in here, if we then got that, then I'm like, okay, maybe that is the bigger structure then, and now we're ready to go. So this is why it's a bit more advanced, and you've got to kind of read between the lines a little bit. You can use sometimes different timeframes as well to help you. Like if you go on the M30, you can see that larger swing of what I'm talking about. But that doesn't mean that you can't start to look to take longs. And that's where you're gonna have to bring in extra confidence. Like now we've had a pretty sizable pullback, potentially to the EQ. We've come into this significant flip range that broke the prior structure. Like, if we draw on premium discount, I don't know if we got to the low or not. Like, yeah, bang on the EQ. So that's the type of things where, if I was going to short from this high, because that could be that movement, because we've already had this deep pullback, it's very different from this coming here because we haven't had that sizable pullback yet. But now when we've come in deeper, we've swept liquidity, we've come into a flip range, we've come into the EQ, it's a lot higher probability that the swing structure is going to take control now. Okay, so that means the point I'm trying to say is this could still be true and you can still short from here, right? To then look for that movement there. But maybe you want to see a lot more confidence. Maybe you want to see this small internal structure here that we're mapping, right? You want to see this get that bearish IBOS from here, right? Rather than just an M1 chock from that high. And then you see that recent internal order flow shift, and now you can have a bit more confidence that we're going to take out that low. Hopefully I haven't lost you there. But yeah, this is why it's a little bit more advanced. And I haven't quite decided where I was going to place this all in the course, but I think I'm going to make maybe just a whole separate advanced module for what we're going through here with internal structure, because I don't want to, I think this would be too overwhelming, right, if you're going through this for the first time in a course. Anyway, that's for me to figure out. So yeah, and this is what I was saying about that high, right? Again, you could look for some shorts from this high, but this is where maybe you want to see a bit more like convincing break of that internal structure, and then we could go in. So this is the other aspect of what I've kind of been trying to make clear as well, is if you have this understanding, we've pulled back to the EQ, potentially that swing high lows in place, now getting that internal structure being bullish, this is where it can make more sense, and we're trying to talk about this a bit in the meetup, to take what on paper may sound too aggressive of a trade, i.e. buying up here, because we're right in the premium, we're almost against these extreme supply levels, especially after we then have that sweep of the M15 high, so we haven't quite closed above. But if you can read what's going on in the lower time frames, right, and you like what you're seeing with this bullish order flow, and then price comes into here, although this could be an external range liquidity sweep and we could switch bearish, until that happens, until we get that bearish IBOS, maybe you're happy to take the long within here, right? But now you have a framework of understanding, well, whilst this order flow is bullish, this internal structure is bullish, I'm happy to be, quote unquote aggressive and get that long within here, because it's likely price has now done its job. And if I'm wrong and I get in long here and I take a loss and then we switch bearish, okay, happy days. Now we have that internal structure, and now we can assume that that's going to hold until we take out that low, right? So that's kind of the framework in which you can use, and it can just give you confidence for those longs here, right? You see, boom, come into that demand, and then we are off to the races. But also what can help you, it's not just concepts on their own, right? It's about where we're coming off a monthly level, big liquidation, big V-shaped reaction, potentially expecting, that daily pullback, et cetera, et cetera, et cetera. It's about adding all of those pieces to the puzzle together. So let's play this forward a little bit and try and get some more interesting areas, try and get up to around current price action in time. So here, that for me would be a sizable swing pullback, okay? So that would be the swing low, of course, right? So bearish chock level would be here. Let me zoom in. Right. Now, in terms of internal structure, sometimes it can get a little bit confusing. Do you want to look at these little swings here? Do you want to look at, like, for me, that would be the more significant internal structure, that would be a leg up like that. Again, this is where you can use your timeframes if you want, like go on a 30-minute, right? And you can see a bit more of a pullback. And then that for me would be more like 5-minute structure, okay? So you can use them both, to your advantage and knowledge. Now, we pull back, right? We get the chock. We do get an internal breaker structure, right? Whether you classified it as that little pullback or you were looking at the slightly bigger swing, which is, right? And we get that break there. So that would be your swing, right? Your internal swing, and that would be your IBOS there. So let's map it out. All right. Cool. So this one for me is actually really tricky because we want to get the pro trend longs. There's no real clear unmitigated demand other than this wick. Like these are all already mitigated. Like that zone there's already had a movement away. You can see price came back into it. Again, price came back into that next one. So for me, there's nothing really too clear unmitigated. I know there's a little bit of a wick here, but it wasn't that great. So I was like, okay, well, let's at least wait for a bullish chock, right? And then, my thinking was in the live market, either I want to see price come into here and then we can look for our entry model or wait for the chock, whatever you want to wait for, like an M15 chock. Or at this point, I don't really see anything too clear within here. We could easily just be doing this and continuing lower. So I wanted to see a chock first and then try and get that movement here. But as we can see, it kind of just chopped around. It never took that low, which then means we got the chock here, but then it just flew off. So for me, there wasn't really a way that made sense for me to want to get in. I know some people were looking at, eye chocks within here and stuff. Or technically that was the one over there and getting in. But yeah, for me, it doesn't really make too much sense. And then we had some unexpected news from Lagarde doing her thing, ECB president. And then it shot up. So now the new swing low becomes here. And then let's fast forward it to a bit more interesting price action. Let's see what we get on. So that's just another sort of pro trend swing pullback, right? A lot of momentum upside. And then we get another break of structure. Okay, so this being the new swing low, cool beans. And then let's see what happens next. Okay, so did we break and close? No, so we failed to break up above that high. Let's bring this forward a bit to nearer London. Okay, so we almost have a sweep of this high. Let's quickly check where we are in the old higher time frames. And I'm rushing through this a little bit, but okay, so yeah, we have this kind of 4-hour supply. It's already mitigated. So, we came off this wick. So I wasn't actually expecting this to give much of a reaction. But we have to know, right, we've had that 4-hour break of structure. The daily is bearish. Where are we? Haven't quite come up into the prior daily range yet. But after a 4-hour break of structure, what do we expect? We expect the 4-hour pullback. So we have to be aware that that could potentially start to happen. That would be the 4-hour chalk line there as well. So let's see. So we failed to take out that high, ends up being a sweep. We then have the M15 shock here, which is pretty much a decent internal breaker structure as well. But we could assume that the M15 bullish trend may continue until it doesn't. We have this extreme sweep zone as well, right? Swept liquidity below those lows. Okay, so as price is coming in on its own, you could say, okay, this is a pretty high probable area to look for longs. But what you may want to wait for is at least a bullish M15 change of character, right? This is a similar scenario to a few we've already gone through in these walkthroughs where yes, you can take longs from in here. I'm not saying you can't, but it's just about understanding that, or ideally what we'd like to see is if we can get in on the M1, imagine this green line is the M1, right? We get our nice picture perfect entry model and we get in long now, and then price pulls up to this supply, right? Clearly the recent order flow is bearish. Then we can remove our risk. Whereas what happens a lot is price does this, maybe it comes in, it gives an M1 shock, it doesn't tag you in, it goes into supply, and then you're looking at, okay, well, if I look at my trade plan, it's pro M15 trend from the extreme, had an M1 shock, okay, why am I getting losses from the extreme? Well, it's because look at the order flow, just wait for order flow to shift on your side, wait for that to happen. And that you don't have to, but these are the scenarios in which you may want to do it, right? You can see we just come into supply, then we chop around. So just quickly draw on, supply holds. We never get that bullish change character, right? You would have wanted to wait. Then we take out this low here. So for there to be a bullish chock, it would have need to have been that high there, which again, we don't get. So even if you had waited for that, been a little bit more patient, maybe that was a sweep, then you could get a little aggressive chock here, and then you could get in. At least that would be a bit better. But what would be even better than that would be waiting for that high to go, right? Really getting that IBOS, because once we get that IBOS, right, this internal trend, or even if you include that, right, would then be over, and now we can start to target, these highs here and assume that that bullish internal trend is going to go. Okay. And then if some of you really want to be aggressive, right, you could take the short from within here if you wanted to do so. And then we get the bearish breaker structure. And this is where you may want to follow the, literally just keep following the internal structure until it shifts, right? And this is a bit more aggressive, it's doable. The one thing I'll say about this though is what do we expect after a breaker structure? We expect a swing pullback. So if you are going to short these, it's doable, but backtest it because you have to expect at any point that swing pullback can kick in, right? So sometimes this will work out really well, momentum's strong and the higher time frames are really overextended or coming off a great higher time frame level. Other times you'll do this and you'll get burnt a lot, okay? So proceed with caution is all I'll say. You can see here, right, it works out really well. Tap into the range, go. Tap into the range, go. Right, so it does work out, but other times you'll get burned. So please don't just start doing this like on your main live account. Test these concepts like anything. But I just want to stress that importance. Okay. And then we're coming into 4 hour levels, blah blah blah. I don't want to spend ages kind of going through all the analysis. I really kind of just want to, like I keep saying, focus on how we can interpret structures. So this would be the M15 swing high at this point, still because we haven't had a swing pullback, and that's the highest point that caused the last swing boss. Here we do get an M15 change of character. And this is what I mean, right? Change of characters are the most aggressive form of structure. We want to pay attention to them in the right areas. We're not really coming off, what are we coming off here? Actually, to be fair, I think that was 4 hour demand. No, this is the problem with backtesting because TradingView jumps ahead a little bit, but let's double check. Let's draw on. Yes, so to be fair, there was a 4 hour level here. That doesn't form very well. Obviously, no super liquidity and it leaves equal lows. We get a little bit of a bullish shock, but it's during the London lull, which is another thing, right? That's not an ideal confluence. And then we can continue down. But what we'd want to see, right, for that better confluence, even if you view this as that little internal structure, is you want to see that candle closure. It can be a lot more significant. And then we can look for those movements, right? So then we can continue down. Again, there might be even, is there another bullish shock in there? No, there isn't. Continue down. Is there a bullish shock here? It's the inside bar. Do we take it? No, not yet. Okay. Now, if I was looking at this, okay, we might get a bullish shock and you could get involved, but I would want to see really that for me would be one movement. That's the bullish IBOS I want to see. Now, when that goes, what would we look for? We look for that trend to continue, whatever level of supply we want to look for it to go. We may get a bearish chock. Going to keep going over this, right? And that's a good sign to get in short, but we have to be aware that that bearish chock may have happened just for the green internal structure to come back into that higher low, right? And then we get a bullish chock, then we can assume that high is weak. It's only once we get the bearish IBOS, so this one here, that now we can say, okay, this leg has failed to take out the swing high, so now this leg is weak, and now we assume that that bearish internal structure will continue until we take out that low, right? But obviously within that, we can get internal structure within it, okay? So let's take a look at how maybe this forms. And then we'll wrap it up because we've only got 2 days, I think, left of price action. Okay, so we get a bullish chock, so you're well within your rights to look for longs within here, right? But now you see how we get that kind of much more convincing internal break of structure, especially with the way in which it happens, big V shape, swept liquidity below that prior old swing low. M15 IBOS, cool. So now you can be looking for this to happen, like I just said, right? We can now look for that internal trend, okay? And you can also look for shorts from any unmitigated supply zones, but you have to realize if you're getting a short from something like this isn't going to necessarily be the move that's going to do that, okay? Because this is probably just going to maybe provide a reaction to come into here, or maybe this unmitigated inside bar here, right? And then continue. Because now the internal structure is bullish. It's only when the internal structure realigns with the swing structure that's when you can then start targeting those bigger moves, right? So now we come in, we pull back, right? So come in, bullish chock. So now we know we can target that high, right? And that's the larger swing. And we're continuing up. So let's see if we get an IBOS here or not. And then we eventually get it, right? And exact same thing. Old supply zones can potentially provide reaction points. I mean, that one already had a mitigation, so it wasn't great. Just to come into where? To come into this level, to then continue up higher. I think you guys can see that. So let's play this forward a little bit. Okay, now, This is where it can get a little bit tricky, and I got a little bit caught out with this, right? And this is where you need to kind of read those slightly larger swings and the slightly smaller swings at the same time. And this is where price gets very, very fractal. And this is what happens when you have these real big swings, right? Because this is the M15 swing structure. And this is what I was really trying to drive home in those theory lessons that we did over here, right? Where you can get, the orange structure, then the green structure, and then you could have, let's say, purple structure within there, literally all on one time frame. Okay, so what do I mean by that? Well, if we look, let's use orange for the slightly larger swings. Okay, so let's say we have, we call this that bullish breaker structure, and then we have this movement here. Right now, is that the breaker structure? And you'll see what I mean if I play fast forward a little bit more, because we get a change of character here. I will explain this a bit better in a minute. Just give me a second. So we get our bearish change of character. Now you could see that, well, the IBOS, right, would be because you have this movement here, and then that's where it closes. So that would be the IBOS of that structure if you're mapping it that way, right? So we'd want to see that go really, okay? But we also have to be aware that there's kind of a bigger swing in here, right? When you look at this, that, and then that, okay? And this is where it can get a little bit complex, and sometimes jumping up a time frame can help. Like if you look at the 30-minute, right, you can see how that's basically just one leg. Okay. So when we get this breaker structure here, or change of character, I should say, and then we get this IBOS, right? This is where it's tricky, because you could say, well, now this trend here has changed to bearish, right? So now what do we assume? We assume that this leg is now done, right? That bullish trend has failed because now it's bearish. So now this leg, or so I should say this low has failed to take out the high. So now we expect what? We would expect that to continue bearish until we take out that low. And whilst that is true, and whilst that is a framework I would use, when structure can be a bit more complex, you have to be aware that maybe, if I use a different color, green, this is the bigger structure now, that maybe this is that one leg, right? And that is just doing this. So you have to be aware of that in the back of your mind. So if price is coming up to these levels, you may want to think, well, actually, that could be weak. So yes, I could short from here in case the orange structure, right, is what's right, because that could then be good. But the point is, if you're not sure, because you can see the other bigger structure as well, then this is what I'm saying. It's not that you can't trade from here, but maybe you want to wait for a bit more confidence, and you want to wait for a bit more of a structure shift, like a clear M1 swing boss rather than just an M1 chalk or like an M5 chalk, because that would be like an M1 boss. These are the starts to be how you can get a bit more advanced and think about those things. I'm going to leave it up to you and how you want to do that, but it's just about introducing that into trading and not being surprised at, okay, I've got an M15 zone here, I'm just going to jump in the first M1 trade, and why is it not working out sometimes, right? And this is where it can get a bit more advanced. So as then we then come down into this level, and then we're thinking, okay, potentially this is one leg, and we're coming down here, we've now had a bullish chalk. Okay, I want to look at this level here, but I'm going to wait for a lot more confidence because, I can see this as being a weak internal high of that larger structure. So yeah. And this is what I mean, right? So it looks like there definitely wouldn't have been anything there on the M1 anyway, and it was London low. But yeah, you can see now, right, we've got that bigger movement, or whether you want to call it from here, and we've got that. And then within that, you can see how there's a smaller movement, right? Because you have now this internal structure. So let's say price was to come down and give us that bearish boss. That doesn't necessarily mean that this low is now going to go, because it's only when you get this orange break in, that low will go, right? Because then that movement has failed. I appreciate this gets a bit confusing, but let's play it forward and I'll try and show you what I mean. So we've had that larger IBOS here. We're coming up into some extreme levels now, right? So we can look for those pro trend shorts up here, but ideally we want to wait for M15 internal structure to switch on our side. So let's see what happens. So we pull back, right? And this is what I mean, right? We have this smaller structure, but if that low broke, I wouldn't necessarily think this low is going to go, because we have this larger movement, and it could just be to do that, right? So let's see what happens. And then we go. So I know some people were looking at, right, this. Oh, we've had a bearish M15 chalk. We look left, what we've come off, nothing really that great anyway. And you're thinking, right, it's pro trend, we've had an M15 bearish chalk, therefore we should be taking out the swing low. Well, no, because look at the internal structure. Whether you map it tight and you're looking at that, you can see that one's pretty obvious, or even if you have the bigger swing, right? That's why this is a weak internal high. It's not high probability. Maybe you want to short from it because it could play out, but this is where you may want to wait for a lot more confluence in that area, right? And then we have another bullish IBOS here. And don't forget, this whole time you could be looking for longs if you want to keep trading this, right? These are the types of way in which you may want to bring it into your trading. Again, from here, a bit aggressive, but you could look to, I'm not saying you should, I'm just saying these are things to have in your mind. You could either look to long from here, or if you want to short, you want to wait for that to break. But even if that low goes here and we get a bearish IBOS, you have to be aware that if you look at the bigger structure, so we have, so let's draw on, right? We have like that green structure, but then what do we have? We have the orange structure. We have that larger swing in price. So we could break that level, but just to mitigate this level here and then continue up. But then we've had that bearish green IBOS, so then you may want to short from here. But do you know what I mean? That's where you want to wait for more confluence. It can get very, very tricky. So let's see what happens next. I don't think we even get a break and close below there, do we? So that would tell me that this high is weak, right? Because we are still bullish on both the small structure and the larger structure in terms of the internal. So that would not be a high I would want to short from. And then it gets broken, right? Then we come into, not quite into the refined pivot. We get a bearish chock. I think this is, daily roller close anyway. So we won't be looking to trade and we'll be ignoring those candles. But you can see here, right? Just looking, at the internal structure, it just saves you from all of this, right? Just waiting for it to shift in your favor. So let's bring it forward to London the next day. And we have then switched bullish on the larger swing trade, and then that stays as our swing low. So you can see it was quite tricky in here, especially, I've kind of viewed it as that way, and then that being bearish, but then you can see actually that's also one leg as well. And this is where using different timeframes can help you a little bit. If you look at like the M30 or potentially even the 1H, and you can see that could be a bit of that. And that's where you may want to just be a bit more cautious with trading from within here. So then at that point we are bullish and we can look to potentially play the pullback. So what's the bare minimum most of us would usually wait for is for the M15 chock. But in terms of internal structure, even if you map it tight, that is definitely just one movement up. So I'd really want to be seeing that logo from an internal structure perspective. So this is the last day. We're almost there, guys. Well done if you've made it this far. Okay, so we have a bearish chock, right? So again, if you were trying to buy up here after an M15 boss, what do we expect? We'd expect an M15 swing pullback. So yes, maybe you could get a trade within here, but it's a lot lower probability. We have all of this liquidity built. You don't want to be buying from here. Or if you do buy from here, this is what I was saying, wait for that bullish eye chock, wait for that internal recent supply to fail, right? Wait for that to get involved. Or as soon as price comes in here on the M1 or whatever you use, right, you want to be getting in straight away. And then once price gets into this supply, then you've removed your risk because it's likely that's going to continue. Whereas if you see the M1 chock, then it goes up into here, and then you're trying to buy now after the mitigation, right? Nah, you can see, don't be doing that, okay? Cool. So now we've had the M15 chock. Maybe you want to play that internal pullback into here to then there. So now it's a lot safer to now look for shorts, right? You've got the supply chain, you've got the fractal structure on your side. There's nothing really here that I'd be that bothered about, right? That candle formed during spread hours, so usually ignore these candles anyway. They don't tend to provide much of a reaction because it's kind of like a fake candle. As the spreads blow out, and then you could look for that trade, and then we end up switching bearish. So even if you were looking to buy from this internal low, do you want to jump in on the first M1 change of character? Right, considering all the other confluence where we are, but everything below, no, especially the way we're selling off, right? So you would just wait for a clearer movement, wait for at least an M15 chock, right? We don't want to be buying from up here. And then we start to sell off, but cool. Let's play fast forward a little bit. Throat's starting to go. And this is another thing about what I mean, right? Let's say you wanted to short from here, right? What do we expect after an internal break of structure? We expect that internal pullback. This is not well priced, right? And that's where you don't want to be kind of being as aggressive at that point. Now, so this pretty much brings us to kind of where we are. So let's think about this. So we've had a bearish internal break of structure, but we're bullish on the swing structure. So, let's keep it simple. Let's look at the biggest swings. What do we expect? If you ever get confused, we know this is our swing low, this is our swing high. We're expecting what? We're expecting a swing pullback to then continue to take out that high. But if we're mapping the internal structure, what do we look at? Well, we look at that bearish internal trend. And then once that internal trend finishes, right, we may come into a nice level of demand and we may get a bullish M15 chock. What does that M15 chock signal? It could signal that the high low is in and we're about to go, but we know that it could just be to come into this level here, this protected and strong internal lower high. So then if we come in and then we get that bearish chock, right? Now we can then look to target that low there. It's only once we get the bullish IBOS that we can say with much stronger conviction that now we're ready to take out the start of that bearish trend, the start of that leg, the weak swing high, because now the larger internal structure is aligned with the bullish swing structure. And now we can keep buying until we take out that high, right? And that's what we're trying to do. Sometimes we can get lost, we can get really lost in here when it gets a bit more complex. And if you do get lost, like I was saying, delete everything, remap where your swing structure is, know what you're trying to look for overall, and focus on the bigger swings. That way you're not gonna get as wrong if it starts to get really complex, okay? Like for now, we've had that bearish IBOS. We can say we haven't potentially pulled back into maybe the more discounted demand. So what we could potentially expect is that this will be that protected internal lower high, because it's a weak swing high, but it's a strong / protected, whatever you want to call it, internal lower high, right? So now we could be coming in to then do that, okay? But we also have to bear in mind that, swing structure is stronger. There could be a high low. We've had a bullish chock. You can see within that larger orange structure, what do we have? We have this, okay? So let's say we get short from this M15 supply, anticipating that next orange leg, right? Let's say we get in on the M1, we have to be aware that as price comes down into this green low, right? That could happen and we could continue up higher. And then maybe we switch bearish, right? And then we go. So these are all the things where it can get a bit more complex and you don't necessarily want to be trading in, like if price comes into here and then you're trying to short, you already want to be in the short if you're going to trade that movement, right? So let's play fast forward to where we are. So we got that little green IBOS, with that green structure I was drawing. Let's make that say green. This is the end, guys. We have made it, don't you worry. And then this would be like that larger IBOS I'd want to see. Okay, so at this point, this is, let's see where we are. We're at the end of the week. So this is where it's pretty messy, pretty horrible, to be honest with you. And I wouldn't necessarily trade any of this with high conviction, but if we use that internal framework, like I said, we draw it one last time and that will be officially the end. So we've had the M15 breaker swing structure. This is our swing low, this is our swing high. We're expecting that swing pullback to then potentially get another swing high. Let's ignore the 4 hour and the daily and everything else, just purely M15, right? That's the basic premise in which we use for swing structure. We should all be very, very comfortable with that. Now, we look at the larger internal swing structure. That was that large pullback and one push up, and then we had a bearish IBOS. So now we switch bearish to what we assume to facilitate that overall swing pullback. And then when that switch is bullish, then we can say the large internal structure is aligned with swing structure. It's much more likely the high lows in place and we can follow the bullish structure until we take out the weak high. Okay, so that's the larger internal structure that we're trying to trade. Now within that, I can get my little green line out. What do we have? We can say that we have this. I mean, even if that was just one straight push down, right? This is a point I might get a question about. I would still view this, even if that is, I would still start to look at the internal structure, right? Some people call it substructure. This is what I would be looking at. I would still classify this as an internal boss, even if that was one straight push down, right? I'm just reading between the lines in here, okay? So remember, we're looking at the larger orange move, but then we formed this little structure here. So at this point, I would have been just conscious that potentially that could happen before we get that next orange leg. But in this case, we did break it. We did switch bearish. So now this green internal structure is now aligned with what? It's aligned with that larger orange structure. So now technically, this could just be coming back into here, right? We've had higher high, higher low, higher high, lower low, and this could be the movement to form that green lower high to now make that next orange leg. Hopefully I haven't lost you there. All right, so that's basically what we're looking for, potentially. Who knows? It's a bit of a mess overall, really, so I'm not going to read too much into it just yet. But that's the framework we use. So yeah, hopefully some of you aren't too lost and confused. If you are, don't worry, right? This is not, do you know what I would say? This is not necessary in order to be profitable. This is just how we can, like I keep saying, bring things to that next level if we advance and we want to get there. And this is going to tie perfectly into the next topic we're going to tackle, which is order flow. So literally going to view the market the exact same way, except we're going to spend a bit more time basically in how we view the exact same concept, but with supply and demand ranges and drawing on. And it may help to some of you, it can make it a lot simpler because you can really visually see what's going on. Others of you, it might get a little bit confusing, especially when we get very complex ranges like this, okay? So Yeah, take time to digest this. Don't just smash through it all into X speed. Watch it again and again and again. And as always, it will really sink in when you practice it and apply it to your charts and forward test it day by day. And hopefully we can all grow as a community together. And really continue to kind of, push our trading to that next level. So order flow will be what we'll tackle next, and yeah, we'll go from there. So love to hear your feedback and thoughts on this, guys. And as always, any questions, feel free to pop them in the Discord or below the video. Cheers, guys.